In base metal complex, higher volatility has been seen. Last week, we have seen copper prices gain nearly 11%, but volatility was too high. We have seen prices moved in a broader range of 680 to 720, but today we have seen prices moved beyond 720 and right now trading at 730 with a gains of 11% during last 1 week period. Similar kind of move we have seen in case of nickel also, where prices moved closer to 1440 what we were expecting, and all of a sudden there was a sharp fall. But looking to the fundamental, prices has recovered very well. Right now also trading near to 1435 level. Among other base metal, zinc we are expecting more bullish, but last 1 week period we have seen prices once gain towards 235 236 and seen a good profit booking. Right now prices are down by 2% on week basis, trading near to 228 level, but fundamentals still remain bullish. Lead and aluminium, both the counter were slightly steady, but looking to the demand from electric vehicles, we expect lead could be the next trigger. A trade above 174 could trigger new buying targeting 185 190 also. In all, in base metal prices we expect with the dollar weakness, hope of stimulus in the major economy, demand improving after China market back from Lunar New Year, also depleting inventories of copper, zinc and nickel would support the prices. So in all, fundamentals will remain positive. Only technical ground we expect prices are slightly over what we can see some profit booking, but on every drop we should go for a long position. Copper we expect unless and until 680 doesn't break, prices can go up to 780 800 also. Volatility will be continue to be high for next week. Nickel prices, as we have suggested, 1440 1450 as a immediate target, almost we have achieved that level. But looking to the fundamental, prices are now ready to test the 1600 level mark also. But as of now, for next 1 week period we can see 1480 as a immediate target for nickel. Zinc prices, we have seen harmonic pattern has been formed. Hold about 228 level can give us a target of 238 240 on higher side. Aluminium and lead were not much participated in the last week rally, but holding above 172 makes both the metal more attractive. A bounce towards 176 177 is expected for lead and aluminium in next 1 week period. In last 1 week period, we have seen greater volatility coming back in bullion market. On international market, we have seen prices are moving in a broader range of 1780 to 1820 range. We have seen dollar index once again under pressure, and last week we have seen dollar index drop below 90 level mark. That has supported the sentiment for gold and silver. From the US side, we have already seen Fed has clearly told that interest rate is going to be at an ultra low rate. Because of that also we have seen overall sentiment is going to be positive. But other than that, there is no other event that is supportive for gold and silver. As of now, we expect the broader range for gold on domestic market would be 47,200 as an immediate resistance and 45,500 as an immediate support. Meanwhile, medium-term outlook remain bullish only as global interest rates are down, dollar index are under pressure, hopes for stimulus are going on in the market. So in all, gold is expected to trade with a sideway to positive for next coming week. A break of 47,200 would trigger a fresh buying in gold, which can drag the prices above 48,000. Similarly, in international market also we expect unless and until 1820 doesn't break and hold, prices are expected to trade in a very choppy range. A break of 1840, 1820 can give us a target of 1856 to 1870 in coming period. But in case of silver, we have seen continuous strength is being seen as base metal prices are rallying very well and industrial demands are picking up. We expect silver prices is going to be more fundamentally positive. In international, we have seen prices very well settled about $28 mark, give us a immediate resistance of $30 what we have seen 2 months back. In all, we expect on domestic market 71,200 acting as a strong resistance for silver. A break of same can give us a target of 76,000 to 77,000 once again. In all, industrial demand is expected to pick up in coming weeks as stimulus in every economy is been there. Also, gold and silver ratio is showing a further weakness towards 60-61 level. That clearly makes that silver is going to outperform gold. So in all, for next 1 week period, gold is expected to trade with a sideways. A drop towards 100 would be a good level to buy. A break of 200 can give us a fresh breakout for gold. Whereas in case of silver, either on a drop of 69,000 or 68,500 would be the fair price to buy. Else 71,200, a breach same level, can give us a target of 76,000. Overall, bullion is going to be positive for next week. Complex energy complex, we have seen very inverted move where crude prices gain nearly 4.5% to trade very well above 46,000 level mark, what we have expected last week, whereas natural gas prices dropped sharply around 9% to trade below 205 level. Overall, we expect crude oil prices technically showing some sense of overbought, but fundamentals are still supportive. One side, with the hope of stimulus in the economy would support crude oil prices and can gain further from here to the range of 4750 to 4800 level mark on domestic market, whereas in international, as per many bankers, they are targeting $70 before March ends. So overall, we expect crude is going to be positive as Saudi has cut down the production from February month, and let's see in next meeting whether this production cut would be continue or they can start rising the production as prices in last couple of months we have seen rallied from almost $50 to near to $70. It will be much important that how OPEC would play for the March month. Secondly, we have seen a drop of almost 3 to 4 million barrel from US side after cold wave struck in US Texas. As of now, output is going to be on a lower side from US, and it will take another couple of weeks to come at a normalcy level. So unless and until output from US doesn't come again in a normal level, we expect prices is going to be on a positive side. Brent can touch $70 mark, and on MCX we can see prices move closer to 4750 to 4800 level mark, but technically market is slightly overbought, so slightly be cautious. Unless and until 4450 doesn't break, we expect prices is going to be on a positive side. Coming on natural gas prices, we have already seen Texas is suffering from a cold wave that should support natural gas price also, but on the other side we have seen some speculations are there that demand could slightly be moderate in coming week because of other regions where the temperatures are normal. Secondly, inventory no doubt is expected to be showing a drop only, but demand is not so much picking up because of the prices also. So maybe some pullback could possible in natural gas prices. Technically 199 would be acting as a strong support. Unless and until 199 doesn't break, we expect prices is going to be on a in a range of 200 to almost 212. Only on a breach of 199 we can see a free fall in natural gas prices to the tune of 192 in downside. Overall, in in energy pack, we expect crude prices is going to be with a positive bias. Natural gas would be higher volatile. A breach of 199 can trigger the fresh selling.